Alright, I just spent some of my morning creating this simple to use and easy to understand budget template. I'm offering this is for free. Just come to freefinancialplanning.org and sign up for the free ebook, and once you get the ebook I'll send you this template. So for right now I'm going to show you how easy it is to use and just walk you through it. Alright, as part of every budget is broken down into two parts. The first is the income part, which is right here labeled in green between these two green bands, and then the expenses, which are in between these two red bands. Alright, I just did some quick brainstorming, and I came up with a bunch of different income sources that most people would have. Started with gross salary, net salary, then assumed deduction rate. That's simply the difference between your gross salary and your net salary. So to use this, all you have to do is find out your per paycheck amount and plug the numbers right in here. Everywhere where you see these blue cells, that's where you can input new data. Everything in the white cells is just simply calculations, so you don't have to worry about changing those at all. Those will automatically change. So once you go through each list, rental income, dividends, Social Security, if you have anything like that, go ahead and just put the amount in there, and you'll see that these pie charts over here will change as well. So that gives you a nice little visual of where all your money's coming from, where it's all going, and then the difference. So if you come down here, this is going to be your primary income. This is the person creating the budget. Down here, this section has pretty much the same different types of income. However, this is for the secondary income, like a spouse, a partner, etc. So go ahead and plug those in. You can zero those out if it doesn't apply to you. If you're a single individual, you can just use the primary income. It will not affect any of the calculations. So once you're done the income, one quick. This goes with anything in the chart. If you need to add a new one, you can either A, just rewrite over something that doesn't apply to you, or you can just insert another row. Go into Insert, Rows, and then go ahead and ensure that the calculations include that new row by double-clicking and ensuring that it's in there. Alright? So once you got the income done, all you got to do is come down to the expense part. And this is pretty much the same thing as above. Determine your different expenses, and yours might be a lot different than the ones I came up with. Everything from mortgage, electric, water, clothing, internet, etc. Just plug in your per month amount. You can find your per month amount easily by going through your bank statements. I'm sure you have online banking. You just go in there and pull those for the month of, let's say, October. And once you have all those expenses, just go ahead and total them up and plug them in here. It's that easy. The same thing with, well, not to get too far ahead, that's the non-discretionary expenses, which are things that you pretty much must have. And then down here, this section is discretionary expenses, things that you don't need to have but are nice to haves, things that you can choose to spend money on or not. I like to look at expenses that way because it gives people a different perspective of their budget and what their expenses really are. When you break out their expenses and show what % they have to pay and what % they don't have to pay, but they usually do, that shows that discretionary expenses is the difference between having a nice sized portfolio and just spending money every month. So that's why I like to break those two out. And then the expense total is going to sum up everything from your non-discretionary and your discretionary. And same thing with the income. It totals up your income from both spouses or partners. And then down here, your potential savings and investments. This is going to be the difference between your monthly income and your monthly expenses. That's going to be the money that you can have to put away for a rainy day, to invest in the market or bonds or whatever, depending on your risk tolerance. You just go ahead and calculate that amount. And I imagine that if this is your first budget, that amount is going to be probably closer to zero than you would like. And that's when you take the time and you go up to your discretionary expenses and you look at what you can cut. That's for another video though. Down here are some more graphic charts about your monthly income and expenses and your potential savings. And then I also calculated the annual for you just to give you an idea of where you at and how much money you spend on an annual basis. So after you're done calculating your income and your expenses and your potential savings and investments, you click on this tab down here. And what I did is I created a wealth builder investment type tab for you. So if you come over here, you'll also see that these are blue cells as well. This is where you need to plug in some assumptions. I have some in here. These don't always hold true in all market environments, and so a little research, you're going to do a little research and dictate exactly what that's going to be. You can even use like a mutual fund annual rate of return expectations. You can plug those in there. Like if you look for a T. Rowe Price large cap mutual fund, you can plug that in there just to give you an idea of what to expect your money to grow in the future. This amount right here is carried over from the previous tab, so you don't have to worry about that. You have your annual inflation assumption, which is about 2%-ish a year, maybe 3%. Long-term bonds expected return, large cap stocks, mid cap, small cap, and risk-free money markets like savings accounts and stuff like that. This graphical chart will show you your portfolio allocation, which is dictated by you. So you come down here and you determine what percent of your total portfolio you want in each one of these types of assets. I just threw in some examples here. You can choose to use those. You can choose to change them if you would like. However, diversification, having a little bit in each one of these is a good idea. Down here, your last assumption that you're going to need to make is risk. And this rate right here is based on the volatility in the market and the different standard deviations between different asset classes, such as long-term bonds, stocks, money markets, stuff like that. So if you come down here, just plug in a percent of risk assumption. You can go anywhere from 5% to 10%, depending on your portfolio allocation. What that will do is that'll just draw these higher and lower bands above your accumulated wealth over the next 20 years. And I'll show you, what's the possibility, where's the risk, because this amount is not guaranteed at all. So it gives you kind of a visual of what you can expect. For this amount with 20% risk, you can expect a 400,000 portfolio to go to 450 or about 250-ish. That's about 300. So that's the quick and easy budget. Once again, you can find this on freefinancialplanning.org. Just sign up for the free ebook, and I'll send this thing right to you. Take care. Have a good one.